What is good? What is good? Hope y'all are doing well. Today is May 6th, 2024, and we are back. It's been a little second, but as we all know, we got to get back into the normal rotation of just giving you guys good value. Here on YouTube, I see many things throughout the days and weeks and stuff like that in terms of like what is something that I can actually take and what is something that could help me as an investor or even yourself. You might be a budding investor looking to learn here within the YouTube sphere. And the biggest thing is what I can say is just very few times am I able to say, okay, cool, like this is something that I can apply to my life in the way that I understand it. So me understanding that's the search that I'm constantly on, I'm always trying to give that in these streams of ways to explain things, ways to give example, ways to just walk things through with you guys to show you that investing is not an aspect of getting everything right. It's not an aspect of, just really being able to just say, all right, cool, this is the only thing that I need to know. It's a forever journey, but it's a beautiful journey to where you're constantly learning new things that can help you improve. And as you improve, you'll understand that you'll gain more confidence. I was basically doing some videos, really just focusing for the folks there in the Vaults of Crypto. Definitely, you guys join the vote if you ever want to get some real deep value information that we don't necessarily talk here about on YouTube. But we're kind of talking through the concept of being able to have confidence and competence. So having confidence is one thing. Confidence, for example, buying the dip, like that's kind of what we're going to talk about today. Like, how do I have confidence as an investor potentially here in the crypto world in buying a good dip? Like, how do I know, okay, here's a really good time to take action? Not from someone having to tell me, but generally from what I'm able to understand myself, what I'm able to look at. And I've made a lot of tools to help us in the Vaults of Crypto to do this exact thing. And so when you're able to operate in confidence, that means a couple things. One, it's like, okay, cool. You're gaining momentum as an investor, because the moments when you're just like, I'm not quite sure, or if you've got all these internal questions, it means, okay, you're still trying to figure out that whole game plan thing, right? But when you have a good game plan, like for example, so when I was playing in the NFL, one thing that we would always do is have obviously a whole game plan for the team that we're playing the week ahead of time. That first day that you just get presented the game plan, you've got to go and study it. You've got to kind of try to understand as much as you can. And then we continue to add to that game plan as the week goes on. But the key is this: once you've already got that game plan and you've done the reps, you've done the study, the film study, it's just like once the game is here, it's time to go. It's like it's time to really execute on everything that you've already practiced. And that's the key. I think a lot of people that are trying to get better at investing, they're not putting in the reps of practice. And so what does that look like? It looks like being able to, use the methodology over and over and over again till it makes sense to you. And everyone's methodology is going to be different, right? But the key is making something that's going to give you a set of parameters that will give you the confidence to allocate funds, especially into a dip. And so here in crypto, it's easier said than done. A lot of people are like, oh, hey, I buy the dip all the time, or I just DCA. Like, DCAing is good, right? Because it just keeps you invested through time. But how do you really, really get like the juiciest part of when prices dip? Like, for example, Bitcoin dipped down to like 56K and some change. Like, how do you get like down there at that deep value? Now we're already back up at 63. So, it's still good, obviously, because we're not at all-time highs, but what is a way for you to have that confidence and that competence to take action when you really need to? That's how you keep a low cost basis. So, and sometimes it's like in a day or two, like you have to make this decision quick when it does come. And here's the thing: these opportunities don't come every single week or every single day. And so the beautiful part is once you built the framework, once you've understood the framework, it makes it easy. And once you're confident and things can be a little bit easier for you, that's when you become competent. Like, oh, okay, like I trust myself that I am making the right decision. And the feeling in crypto is like when everybody else is kind of going a little nuts, or crypto is just seeming to just not do what you may want it to do intrinsically on the inside. Like you want your bags to go up, but you feel like, that's just not happening. You feel that gut feeling. That's another part of the intuition about saying, okay, cool, actually, let me actually double down, triple down, quadruple down on this dip alongside of some of the other parameters I said and some of the things that I'm seeing on the chart to basically confirm that, I actually am making the right move here. So we're going to talk about that today. I appreciate y'all who are here that have showed up. Yes, we took a break, but you already know we're coming back with nothing but fire. So appreciate you guys. Of course, let's see who we got. Okay. Tell me your secrets. As mentioned before, all secrets are in the vaults of crypto. And there is no secret, right? But yes, I got to give y'all the juice, especially in the vault. Wade, what's good with the fire? Let's see. Let's go. We got a little countdown with the Rockets. Let's go. You already know. Yeah, for sure. Like always first in the chat. Like one thing I can't say about Fast Abdul is he's everywhere. He's like, watch out. Like he's in here. So I have a little video that I want to actually play, which, there's certain parts of this that I think that make sense to me. Certain parts of it that are just interesting that I always kind of remind myself as, I'm an investor going into my 10th year of being an investor. And it's been a beautiful journey because you learn so much that it's invaluable how you can now use your experience to help you in the time moving forward. And that's what it's all about, staying in the game so you can get the dividend of knowledge through the years. And that's pretty key. Yes, sir. Henry R. Are you here? Are you sure? All right. Yes, you are. Let's get it. Yes, sir. Definitely got to bring that heat. Let's see. What's up? Waiting for that moon train to start running, and the moonshot is kind of, what we as investors in crypto get allured to the most. Typically, anytime we start talking about like 5x plus within a short duration of time, less than, a year or two, like that's a moonshot. Like in any other sense of the word, that's like a real definition. So a key thing that I'm kind of noticing and paying attention to is just understanding what real patience looks like. And you really got to plant these seeds well in advance. And a lot of people, they may come just in time, but liquidity always is going to find a home when it is available. And these markets are seesaws, right? There's times when liquidity is available, times when there's less liquidity available. So all it is just waiting for your turn, basically. And so our job here is to store value, increase value, maintain value. And crypto gives the best opportunity to do that. But don't be stupid, right? Don't do it in ill fashion. Don't make mistakes. Like I seen a guy, this guy like 70 something, like I forget how much it was, $70 million just, got tricked into sending it to another like phishing account. That BTC is gone, right? So he got spammed, he got spoofed, he got finessed. And taking the right precautions, less movement, right? So less movement sometimes is better. Just get the good stuff, just buy all the movement from here to here, do this, do that. Like, hey, just got to be more cautious, especially when you're trying to move stuff around in large quantities. And for Christ's sake, please, test transaction wouldn't make sense there. But anyways, let's look at a couple things here. Let me pop up this video. This guy, Ohio State graduate, his name is Chris Pan, and let's see if we can get a look at this. So he gives a little bit of speech at the commencements. 60,000 people saying, hey, maybe take a look at Bitcoin, talking about protecting their purchasing power. Most people, and here's the sad part, most people don't even know what purchasing power is. Like that's, I mean, it's not sad. It's just the fact of the matter. But let's listen to what he says. Okay. So let's go in.
Great investors are open-minded and understand things before.
Right,
Great investors are open-minded and understand things before other people. So I know this might feel polarizing, but I encourage you to keep an open mind right now. I see Bitcoin as a very misunderstood asset class.
He's getting booed right now, by the way.
It's decentralized and finite, which means no government can print more at will. In the early days, the exchanges for Bitcoin were prone to hacks and fraud, but the issue has been resolved with the recent launch of the Bitcoin ETFs backed by two of the world's largest asset managers, BlackRock and Fidelity. So anyone could hold these ETFs in your retirement account. Great investors are open-minded and understand things before other people.
Okay. So, I mean, not being a Bitcoin maxi, obviously, but just understanding, kind of what he's talking about is saying, hey, I'm at the top of my class. That's why I'm up here giving my speech. I want to give, in part on people, something I think that is actually valuable. Instead of saying, hey, go out there and get a job and do all this other stuff and yeah, congratulations, you're going to be on all this debt and all this crazy stuff. He's actually saying, hey, maybe think about something that you haven't thought about. Like that's the problem with most people. And in my opinion, they are too locked in on, this person's saying this. I don't want, it's just like they're so closed off to many things is what I find, especially when it comes to the topic of money. And the interesting thing is like most people don't know anything about what they're doing. Most people don't budget. Most people just go to work, pay bills. That's it. And so it's like people have been conditioned so much to kind of have a distaste for anything that is not what they're used to, or anything that they haven't been told by Big Brother, the government, that is okay. And that's what the problem is. That's why people are stuck. And that's why many people have situations that they feel like, man, they can't get out of this hole because they are too closed off to learning. Step one. So he had said something at the beginning. Good investors are the people that figure out stuff before other people. Flat out. Like there's no substitute for that phrase or that statement is the truth. Like technically, yes, like if you figure something out and you buy it before other people and they buy it after you, technically, yeah, that's right. You figured it out before other people. So the key is I'm always looking at, okay, what is potential looking like, and trying to say, okay, let me actually learn about this. And sometimes it may take some time to get that conviction to actually put your hard-earned dollars to it. But the last thing that you should be doing is booing. They're saying like, oh, boo, boo, like, oh, I don't want to hear, like, it's crazy. But that just lets me know that we're not at the top of the market yet, because trust me, we'll be at the tip top of the market if people are like, yeah, woo, woo, woo. So that lets me know, guess what? We still got some time to accumulate before those people who are booing are going to come and buy our bags later. It's going to be great. And I always make jokes like this is because, like, he's up there for a reason giving that speech. He has modeled something exemplary that probably some of his other classmates have not. So he's on the up and up. And it's probably going to be funny when, I don't know, 10 years from now, 15 years from now, like a lot of those people that were probably in the stands or even sitting, in the chairs that are just graduating, they might have been booing too. Like some of those people are probably going to be working for him. Like they're going to be asking for a job from him. And he's probably going to be like, oh yeah, I can employ you, right? I can big dog it. I can actually do what I need to do, and I can employ you. And if I was him, I'd probably at some point hire him, then just fire him. Be like, hey, get away. Y'all didn't want to listen to me 10 years ago. Nah, I'm not that petty, but still, right? So the key is this, like, be open-minded to say, okay, cool. I don't know as much as I think I know. If you do that, the moment you do that, your life is going to change. Your life is actually going to get better. You're going to start to see things in a different framing to where things will be like, oh, okay, I could see maybe I could apply this to my life. And investing is a thing that people need to apply to their life through and through, because guess what? It ain't getting no easier out here. The moment you realize that, the moment you should accept that, the sooner that you can start doing something about it. So people got to face the music, face the facts. But yeah, that was an interesting video. Outside of that, let's kind of jump in and say, okay, well, what the heck is Bitcoin doing? We have a nice little comeback, right? So we went down to 56K. We're at 63K and some change. Let's see, what are we looking like currently? So yeah, let's go over to, this whole situation with these liquidations. So as we know, there's people on the long side, people on the short side, people saying, hey, we want to bet. These are futures, right? So we're looking at, okay, how many people are on which side? And what we can see, so green is all the shorts, and in red, these are all the cumulative long leverage positions. So what we can see is that the longs got wrecked, obviously, right? We had Fidel, like, because a lot of things have happened since last time we streamed. So, for example, BlackRock and Fidelity had their first outflows, but GBDC had its first inflow. We have the SEC still trying to sue people or send them Wells notices. It's crazy. But one thing is for sure, that there's still people that are going to be active on one side of the trade in this market. So what we can see is the longs got wiped out, man. It was like hundreds of millions of dollars just like poof, gone. Right? That's what happens if you want to play with that levy, right? Play with that leverage. But as you can see, we're starting to lean a little bit more closer to these shorts being liquidated. And so this would be a very, very, very nice push, right? And getting us to, somewhere in that 67, 68K range. And the thing that'll kind of push us there depends on what's going to happen spot. Like, if GBTC wants to stop selling so much, or Fidelity and BlackRock, they want to start accumulating even more instead of, like net. Like I want to say we are having net maybe like 70 million or net maybe like 30 million positive for these ETF flows. But if we start to get back in the hundreds of millions on a daily basis, oh yeah, we'll be able to push through these prices to, be like another force multiplier to push us through all these shorts. And that'll be, Bitcoin will be right back dang near where it was, like back up to the previous highs with 68, 69K. This is a good time. We're consolidating before things get real serious in this market. Liquidity is on the way, because I'm going to show you that here in a second. So that's kind of where we're at on the leverage side of things. One thing that I find to be very interesting, coinglass.com, really, really, really good site. And, I encourage you guys to click on every single tab and try to spend 10 to 15 minutes understanding what does it all mean. They've got plenty of things to look at. Really, I kind of do want to look at funding rates. So funding rates, what can we get? Technical. Okay, cool. So premiums. Let's see here. Okay. Funding rate history is what I'm looking for. Okay. So let me introduce some alpha that I gave for those that had watched the stream that I did with Miguel about a month ago and some change. I talked about, okay, when funding rate is positive and when it's negative. So here's another thing. So tip number 1, learn to have multiple, I guess you can say, multiple things on your checklist that'll help you get the confidence to do a certain action. So like, write it down, like on this checklist, say, okay, funding rate being negative, check. So basically the way that we can read this, and we can extend this possibly, okay, current rates, and we can look at predicted. They should be pretty close. Okay. So when we are looking at this is going to put BitMEX, Binance, Bybit, OKX, all these other exchanges all together, right? And say, hey, collectively, what is the average of their fund rates? Okay. So typically, and understand that Binance is the largest place when it comes to doing any type of derivatives within crypto. Binance is going to be doing like 80 to sometimes 90% of that order book. So basically, it's very simple. Positive funding rate looks like, we're talking fractions of a percent even. But even at its tip top, we're looking at, BitMEX having a high funding rate, or just, even Binance 0.07. And that's pretty, to basically get in their position, they're being charged, to be able to get and fund that position. So whenever we go negative on this funding rate, okay, your ears need to be up. You need to be having your eyes on the screen and say, oh, I see a red candle here. Okay. Let me see if I can see continual red candles. So typically when the funding rate gets to certain levels and in fact negative, these are really good times to say, okay, let me start to look at this chart a little bit closer, whether it's, Bitcoin, Ethereum, Phantom, Illuvium, Gala, Near token, WIF, just throwing out some names. I don't know. Just all kind of stuff. Pulse X, all that stuff, right? When you see that Bitcoin's funding rate is negative and getting well past the bottom of the midline, these are times where you want to say, these may be good DCAs. Because, for example, we can all go all the way back to November 2023. We had some spots where the funding rate is negative. Bitcoin, in correlation, as you can see, price is pretty flat, and we were kind of hitting that lower basin before we go up, right? And then we have some little blips in times where the funding rate is negative here in January 2024. And then what do you know? The funding rate is nowhere near negative when we start that uptrend. So, this is one thing to put on your checklist and say, hey, how do I know when to start looking at a dip or buying a dip? Negative funding rate. And what you do is, because I'm going to give you guys literally A to Z. Go to coinglass.com, scroll down on the left, click on funding rates. Okay. So just like this, super easy. Like you can do this at any point in time that you choose, but knowing to do it is another thing. So I'm giving you all the sauce. And then go to funding rate history. Boom, click that and you're good. So funding rate is slightly starting to creep back up, which, positive, which is saying, okay, cool. Maybe this dip may not be so dippy for the short term. But looking at the stats up top, let's see if we can kind of get some of that info in here. So looking at the stats up top, we have just about in the last day, about almost $200 million liquidated. That's longs and shorts, and it's about 50-50. So we're chopping. But we still have a good amount of open interest. So open interest is like, hey, how many people are still actively having positions open in the derivative space? And so it's about $56 billion, y'all. That ain't nothing light. That's pretty good. And so that's pretty cool to kind of see that. But volume overall is picking up. So as you can see, like I was saying, most of the volume is going to be happening on Binance and OKX. So this is something to consider. Now, let's jump over to the chart for Bitcoin and get a good look and say, okay, how does this dip look like it's panning out? Were you able to take action? Did you? How do you know when to take action on the next dip? XYZ. So we got Bitcoin here. I've talked about these sideways channels that we find ourselves in, these ranges where we like to kind of ping pong, have some deviation, some underthrows. Nonetheless, then we break out, ping pong, break out, ping pong, overthrow, underthrow, break out, ping pong, underthrow, but just slightly. So this is a very good sign. This is a daily chart. And just to see we just had a few days. So for example, a few days to really get the butter from the duck, even on the altcoins, before we came back to a good neutral position. And so I want to talk about specifically the tools that I made that everybody in the Vaults of Crypto has access to on how to identify where we are at in the price action and when are great opportunities to take action. And it's interesting because I had this 59.9 on the last stream. I said, hey, we started to break through that. Let's go ahead and start to get that piggy bank ready. Start dumping it on, right? So dumping on some of that piggy bank money into this market. And sure enough, we had a few days to do that. And then, we don't know. We may have another opportunity. But from what it's looking like, this is a very strong support because we didn't spend much time here. We came right back up. So with that being said, let's take a look at some of the things that are very beneficial that y'all can start to maybe put in your repertoire of things to help you be confident with your DCA. So first thing is first, because there's so many that I've created, just about 6 or 7 that are really, really going to be helpful. But actually, we can start with this. This one I would say is my favorite. This is actually the first one that I made for the Vaults of Crypto family. And so this is the Heikin-Ashi trend reversal indicator. So Heikin-Ashi candles help you see trend. So we can put that into Heikin-Ashi candles, right? And typically, this is going to keep us from ever buying anything while it's overvalued. This is going to take anything below the 100-day moving average as our case study. And it's going to strip out those periods of time where we're chopping and only focus on like these buy signals. Really focus on the times where we have multiple days or whatever time frame that you're looking at of the same movement in the same direction. So, for example, several red candles, and when you have that first green candle, it'll flash for you when certain parameters are hit. Long story short, not to bore you guys, it's giving you guys the bottom basin of all price action. And I'm going to say that again. What does that even mean? The bottom basin of all price action. If we know that price is never stagnant, it's always up and down, you'd probably want to hedge your positions to always be more so on the cheaper side of these price movements. So everything is kind of in a vacuum. For example, this corridor moving up and down, it's only going to give you these buy signals on the lower half. Okay. So, one thing that I can say, so this is kind of getting all of this bull run. And these sell signals are just letting you know, not necessarily, hey, I got to sell all my stuff or to sell it all even. This is letting you know, this is time where you definitely maybe don't want to be buying. Like, this is when we're overheated. So, this is very cool for me. This makes it easy. This is like one of 7 things that I look at to really give me the confidence to say, okay, cool, let me actually buy this dip, right? Is basically, we're looking at just price movement and trend. Sometimes you don't need to make it more complicated than that. So we have this on a 12-hour chart. The reason why we use a 12-hour chart, because in an up move, this gives you a little bit more data to choose from. So a little bit more opportunity. So, if we were to count, we got a batch of like, 6, 8, 12, 18, let's call it, 20, 24 times since December of 2023. So, think about that. 24 opportunities to buy. But these aren't just 24 random opportunities. These are the 24 best opportunities to buy. Best. Risk adjusted, okay, is the key. So this is how you, one, do a better job of maintaining a low cost basis if you are adding in a bull run. And so the Heikin-Ashi trend reversal can help you with that. Put this on the daily, it gets a little bit more accurate, right? So, really getting that deep value, you put this on the 3-day, and this is going to give you, right? Let's kind of see if we can shuffle this and do regular candles, right? So especially, when we're in a bear run, and let's say, for example, we hit that peak and you actually did just say, okay, cool, well, this flashed off, and yeah, price was at 39,000, and then it went down to 15,000. It's still relatively over the past 100 days, right? Because we're using the 100-day moving average, is giving you better cost bases than the people that were FOMOing up here, trying to do a whole bunch of stuff. These are like, for example, most people that are unhappy in crypto, even to this day, are the people that did stuff up here, right? You did some stuff in here or even in here, whatever the case may be. Hey, you're not feeling too bad. Why? Because you're probably in profit, but the key is continual action. So number 2 on your checklist, right? Give them more sauce. Make investing a habit. Like, make it like it's a bill. Like, you've got more to lose out there than in here. Inflation is real. Like, that Big Mac that you're buying is $10 today. It's going to be $20 in 2 years. So, right? Like, split half of that up, put some of that in crypto, and then, in 2 years, you'll probably be able to get 100 Big Macs, right? So the key is you got to be able to practice storing value for later. If you don't get that habit, guess what? You're going to be working forever. That's just a simple truth, okay? So with that being said, the continual investing is key. Using this metric, not just for one time, but 1, 2, 3, 4, 5, 6, 7, 8. You get a good average of that. So for example, and we're using this on Bitcoin as a case, right? 8 times in between 38K and the low, right? And the low of, what is that? 16K. So you're looking at an average of what? 26K, 25K. That's great. That's an amazing average because you got about half of them up here, about half of them down here. It gets even better if you ever put this on the weekly chart. So the weekly gives you even more deep value, right? So the weekly for this next, I'm talking like when we hit this next bear season, this bearish time, you don't need to do a whole lot of guesswork. Like once we eclipse and come down below the 100-week moving average, okay, use this and it'll let you know, okay, cool. Like, yep, 2 huge buy signals let you know, okay, we've got deep value, deep value. And we're talking about like at 20K, 17K. And then we had a little bit underthrow, but you're maybe asking, okay, how do I get the exact low, Swerve? How do I do that? I have stuff that helps us do that, right? If you want to be that person, like that guy that's like, nah, I got to get the exact low. Okay, cool. I made some for that too. So one thing that we can see is time over time annually over 52 weeks, we see different movements. You want to take price highs and price lows. This is something that, traditional finance is done quite often. Here in crypto, nobody even talks about, even knows about it, except only me talking about this stuff. But I made an indicator that can help us identify those movements, 52-week high and low. So let's pop that up. Okay, let's go here. And let's look at the data. So we can take the Heikin-Ashi trend reversal off. So what does this do for us? This does an incredible job of letting us know. So obviously the 52-week highs over that time duration are gonna be in green, letting you know, hey, over the past year, this is the newest highest price. And then over, the past year, this is the lowest price. Basically, what I'm saying here is this. Use this in the bear market, right, to legitimately, so you see this vertical line right here, boom, that's the ETH low. Boom and boom. And it's getting it down dang near to the day, y'all. So use this indicator, put it on the daily, right? And what you'll find is you will get over the time span, because in the bear run, if you know, typically, question, general, like crypto trivia, how long do bear runs typically last? They last, I think they last about a year or more, or a little bit more or less, maybe 5-10%. So with that being said, with those parameters, this was able to plot us the exact lows. Beautiful and beautiful. So boom. If you want to say, okay, cool, I don't want a $25,000 Bitcoin average or whatever, a $1,600 Ethereum average. Okay, cool. Get even lower, right? So with this, you would have been able to get like an $18,000 average. But this is only going to give you 3 times to invest versus the other one gave you 8 to 24. So it's just like, using these things in conjunction. But also, what does this also do? So the 52-week highs. So this is also helpful. That lets you know, okay, cool, like maybe that bottom basin is over. So what I like to call the round trip, the moment when we hit a 52-week high, then we hit a 52-week low, that's when, oh yeah, like we're back in bull run mode, like continue that accumulation. Like this period here was an incredible time to really stack up with confidence. And so like, for example, from here to here, like that window, that should be all confidence buying in here. Like let's actually put that, like confidence, that confident buy. So confident buying should take place there. And this is actually the first time I'm explaining how to use 52-week moving, or I guess you can say, because this is something static. So 52-week highs and lows, right, can benefit you. So once you hit a 52-week high and low, and this is not just for Bitcoin, we can look at all kinds of assets. And then like that moment you hit that, it's like, oh, like, yeah. And it's even better, when we hit that first 52-week low. So all of this should have been confidence buying. So if we want to kind of understand the dates in particular, we're talking from June of 2022 to about March of 2023. That is dang near a year, y'all. Definitely killing it, buying those alts, especially in the later stage. And I mean, you still could have bought the alts down here, but even if you want to look at something like, I don't know, Total 3. Let's look at that. So everything outside of Bitcoin and Ethereum. And same thing, it's still giving us signals to apply to our investment skill set. So yeah, we definitely had those opportunities. It's just like, okay, confidence buying, right? Basically, first time you see this 52-week low, boom. Like, let's go, June of 2022. Buy and accumulate these altcoins. Oh, things are getting really frosty, right? All the way up to November 2023. So that was even more than a year to accumulate altcoins. So this is how you use just, code, hey, you figure stuff out before other people. That's what I did, and that's what we're doing here. And it's going to help you have the confidence. So for me, and for those that were in the vaults of crypto during this time, y'all killed it. Bought all kinds of Bitcoin, Ethereum, Pulse Chain, Solana, dog with hat, like all this stuff, stupid cheap. People are like, oh man, how'd you do it? Well, I had enough confidence to really back up, what I'm seeing with my dough, my hard-earned money. And so you can only do that when you're competent to do so. So we've just talked about two of the indicators. Let's go on and continue on. So how do you DCA into a dip, right? You can use a Heikin-Ashi trend reversal, use 52-week high and low. Also, you need to assess risk during this time as well. So we have the Asset Risk Indicator Pro. Let's click on that. And so this does a good job of helping us assess just overall risk in the market, okay? And so I won't bore you guys with the parameters are, but same thing here on the daily. This tells us like, hey, we were for altcoins and all that jiggy stuff. Back in 2021, August, this is pretty risk, right? And this is on the daily. We're going to look at this on the weekly too. Learning to look at multiple time frames is how you get deeper knowledge of price movement, by the way. If you only just use the daily or the 4-hour or whatever the case is, you're not going to be able to see the full picture. So if you guys ever notice, I'm running between different time periods to still tell me the full story, because you can't just get it from one time period. Like, so on the daily chart only, sometimes we got to go to the 3-day, sometimes we got to go to the weekly, etc., etc. So, but, still looking at this metric, really, really good deep value. We came below this green line here, dipping below the 25 percentile in risk. And so all of this really, once again, from June to, we're talking what, February? But even that continued on. We stayed very tightly wound close to that line. So, but really June of 2023 and all the way to October before we started to get into like that fair value. And then we got a little overvalued now on the daily. So on the short term. Now I've had these yellow lines here for quite some time, several months now, but basically it's saying, okay, ideally in a perfect world, you'd like to try to accumulate as many altcoins as you can before we get to 530 trillion. I'm sorry. So my mind's already thinking heavy, right? 530 billion. Hopefully 530 trillion here in the next 10 years. But then after that, it's like, okay, cool. If that's undoable for you, maybe you were waiting on a bonus check. Okay, you really do want to try to get majority of your stuff in before we hit 650 billion, which is kind of right where we are. Last call is at 1.1 trillion. Anything above this is dumb money. So I'm gonna write it up here. If you are investing into altcoins, so bum and dumb money, you are RX liquidity if you're buying altcoins anytime that we go above 1.1 trillion. Okay. And so on a daily, the risk is a little bit higher, but the daily is going to give you more fluctuations on a daily basis. Let's also back test this and look at some different time frames, right? We want to look at as many as we can to see, okay, well, what is this really telling us? So in different instances, the 2-day, we're a little overbought, but this is looking at the whole total 3. You want to look at your individual coins that you have interest in as well with that assessment, okay? So something to think about overall risk. Another thing that's helpful to understand sentiment is fear and greed. So we have the fear and greed index for any asset. Boom, let's pop that up. And this is really good because let's take Solana, for example. We're popping around using different use cases, different, let's see, different examples. So let's go to Solana. $156 a coin, not half bad. But like, how were we able to buy this Solana dip recently? Okay. So for example, now let's use the fear and greed. So extreme greed, extreme fear is going to give us a 100-day look back and give us an average on what the sentiment is. And so, this is very helpful when you align this with other things that we have in our arsenal. So if we want to align this with, for example, let's just go ahead and use the Hatter, right? Heikeneish trend reversal. So you're going to notice that there's times when we get down to 20 on this extreme fear, or even below the midline of 50. So I like to use the midline of 50 to say, okay, overvalue, undervalue. So let's go to 50. Boom. Okay. So the times below 50, you say, okay, let me start to look. And when we start to see certain things happen, then let the chart and the data and the on-chain data tell me how to operate. So for example, let's say I just want to say, okay, the parameter I set. So rule number 3, set parameters. So for example, parameter that you set, you first of all jump into the Vulture Crypto, go to vulturecrypto.com, hop on in, right? You get access to these indicators. But then, so first thing you do is, okay, cool. So let me make this little line here for whatever coin I'm interested in, 50%. Once we go below that, okay, cool. Prerequisite number 1. But then on the daily, let me see a buy signal. So I see that we're below 50. Okay. Oh, we got a buy signal. Okay. And you can program it to alert you for those buy signals. Okay. Boom. So that I'm like, okay, my parameters hit. And anytime that we would maybe set that as a parameter, what could the results be? So, okay, even down here, we're below 50. Okay, cool. Oh, we see some buy signals. So that would have been an opportunity to buy Solana for really popped off back here in September of 2023. Similar framing, right? Similar theology. And, you're probably 10x from that point using the same parameter. So this was a pretty nice dip here. That's a nice dip to take some action. That's the first buy signal that we've had for Solana since October of 2023. It seems like 7 months. So yes, higher price, but risk adjusted, this is how you invest if you are looking to get in an asset, right? So boom, there's more parameters that you create. Let's look at some more things. So understanding overall money movement, liquidity. We have something for that. So Heikeneish trend reversal, check. Fear and greed index, check. Asset risk indicator, check. 52-week high low, check. Global net liquidity, 90-day oscillator. Let's talk about this. So this puts all the global liquidity together, but even better, I wanted to look at things quarterly, not just overall, but looking at things quarterly for me makes more sense because investment firms make decisions every quarter. So what we can see is we have had just slightly rising global net liquidity since 2023. But in the short term, since March of 2024, we've had just a little bit of a downwards turn. So a downward / flattening. So just a little bit of down, right? This is actually good because what we find is if you have dwindling liquidity, but your asset is holding and maintaining, that's actually a really good sign. Because on the opposite of going down, obviously, is, as we know, next at some point in time, liquidity over a 90-day basis going back up on an aggregate look. So this is something to understand, right? This is something that you may say, okay, cool, I want to take a good value while, we're getting all these metrics popping off, say, hey, everybody, the sentiment, the fear and greed is, people are a little bit more fearful. We're seeing the trend on several day basis trending in one direction to the downside, whatever, we see the 52-week high and low, all this stuff just kind of popping off for us. Like, okay, cool. And liquidity is kind of, stagnant. Oh, those are really good ops because when liquidity's turned back on, guess what? It's harder to DCA, And so this is something to think about. If we want to look at, Ethereum even. Let's look at Ethereum. and we can track. So, for example, all altcoins. So, framework understanding number 3 or 4, right? Altcoins are the biggest beneficiaries of liquidity increases. Okay, let me get some water. Okay, so as y'all can kind of see here, this is a really, really good example of how liquidity affects altcoins. And I really love the fact that, when we put this on a 90-day basis, it really gives us really good context for, the bear market. So we see Ethereum having a full-on bear market in 2017, going into 2018 and 19. You see liquidity get drained during that same duration for a considerable amount of time, right? Then we hit a time points where we are sideways to up. Price does the same thing for Ethereum, right? We go, sideways to up. And then it's like dang near, it's like on point, man. Like when they say, okay, cool, let's turn this liquidity on. Boom, look at this. And all we're seeing is like pattern up, down, up, down, up. It's like, hey, right? It's going to go in a direction. You got to say, okay, what direction are we in? And it's easy to see, okay, liquidity is heading down here. Like all this time period, like, past like February, March of 2021 was like, yo, danger zone. Liquidity is legitimately pulling back, but prices are still going up. Okay. After it had a huge push to the upside. So other things that you can use outside of price to let you know, hey, what's really going on underneath the hood? Liquidity being drained. Like if you're making moves trying to put your whole life savings in crypto at this time, yeah, ouch. You'd probably want to consider adding large positions when, we have all these metrics that we looked at, those fired off, and then liquidity is actually coming down on a 9-day basis off of a peak. And then so it's just like, okay, you start to notice like that trend change up here. Like you start to maybe see it here, but you're really confirm it once you get into like 2023. And 2023 was a great time to be buying Ethereum. Like all of this was perfect. And so using this is a beautiful metric. And we could, track back and get a lot of data from this. So we're looking at liquidity. We're a little bit more sideways. We want to see this maybe have a little bit more trend to the upside. And so what I'm looking for myself is the moment that we see a break of the high on this 90-day liquidity oscillator, that's going to let me know, okay, things seem to be getting probably heated up. That's going to be a big trend change than the dwindling lower highs that we've been having. So this is something to keep in mind, but let you know, hey, we're still not in bull mode quite yet because altcoins ain't like, if liquidity ain't done this, then guess what? Altcoins ain't going to do this quite yet. They'll have some nominal rise, right? So like on an annual basis, yeah, you still may have like from 2023 to 2024, you still may be up, on that alt, maybe like 2x, 3x on average. I want to say like a lot of things for people in the vaults of crypto that were taking action in 2023 on many coins, they're at like anywhere between like a 300 and 500% net gain thus far on all those buys. So sitting really good. It's like, how many other markets can you basically say, okay, cool, I'm averaging on all the positions that I currently hold, I'm up about 300 to 500%. It's really good, with many more percents to go the longer that we hold. So using liquidity is big. Last one that we have inside the vaults of crypto is using time as a barometer instead of just price. So the halving profit window, let's take a look at that. It works for not just Bitcoin, but Ethereum, everything, right? So halving profit window, and we have it already printed out, plotted out for us here in the future. So the alpha is here today, y'all. So and it's nice to be able to check up on this stuff on a weekly basis, not just only, on the YouTube stream. It's nice to have these tools for yourself, y'all. So having profit window, not going to go through the whole topic of what this is, but basically it lets us know undervaluation, overvaluation, paying attention to the halving cycles. Typically when we have a halving, that's going to give us a supply constraint on Bitcoin, and thus demand stays the same or goes higher, price is going to go up. alongside with liquidity going up. Liquidity going up is going to push Ethereum up. Ethereum going up, alt's going to go up, all that kind of good stuff. So with that being said, we have these dots kind of giving us that little time ticker to say, okay, halving is almost here. Ideally, you want to be trying to do a good bulk of your investing 135 weeks. Okay, 135 weeks after the previous halving. So basically, the best, and this is not gospel, but some really good deep value. All you got to do is go 130. I'm gonna give you guys a sauce on this stream. So from this day, April 13th or 14th, and when it happened, if we go 135 weeks, so 135 bars, okay, you should be buying Ethereum, give or take, somewhere around November, December in 2026. Okay, so I will also put that plain to see. So in the future, I'm giving you the alpha. Buy, right? So buy ETH, Ethereum. Who knows what the price will be? It's probably going to be higher than what it is now, but still on a risk-adjusted buy ETH, November, December 2026. All right, cool. Right, because we see that trend, right? Boom, great time to be starting your DCA. Boom, great time to be starting your DCA 135 weeks after. And think about taking profit any time in between 40 and 80 weeks of the halving. Typically, the longer that you wait in that time period, we're talking maybe week 60 to 80 might be a little bit more honed in, right? But for those that are like PTSD, like I'm not quite sure, we seem a little bit toppy. Okay, do 40 weeks. You're still gonna get some good profit. And if we want to just use this to give us an idea, so investing from the halving, right? This is like early. Everybody, that's early, right? You would have got anywhere in between a 5x and 120x. So probably 120x, probably feeling a little bit better if you waited 80 weeks. But even if you did somewhere in the middle, 60 weeks, you would have got a 30x, right? And you DCA out the market. You don't want to do everything at once. This example here, halving, and you wait 40 weeks, you would have got a nice 7x up to 20x or 18x. Both very good under that short-term duration, because that's the key thing. If you're waiting for the halving, which some people have that methodology, say, hey, I'm just going to wait to the halving to start investing, and then because I don't want to be in the market long, and then this is like the best risk-adjusted time period to be able to get a good increase. We're talking from May of 2020 to May of 2021. In a year, you're 10x, 20x in your money. So with diminishing returns, it may not be that. Maybe we just do a 5x from here to a 5 to an 8x, whatever, or 3 to a 5x. So if we even go 300%, so we're looking at $12,000 Ethereum to, I don't know, maybe $20,000 Ethereum. But it's even better if you didn't wait for the halving. You're someone who took action. We're talking about these lows here. So now, you can maybe get that at a better return for yourself. Anywhere between like a 10x and a 15x. So using multiple things to create a framework to know how to do things, when to do things, parameters. This is what you need as an investor. If I didn't make the case today on how to buy a dip, you need to strategize, right? Know what to look for and then execute. That it really is that simple. That along with a little bit of on-chain data. So for example, one thing that y'all can look at is just simple profit and loss ratio for the short-term holders. Easy way to see this in a bull run. So let's do that. So in a bull run, basically, put it in short, anytime that we dip below this midline and we go red, start your DCA. Anytime that we're above it, hold off. And so, as you can see, we had in 2024, thus far, just 3 blips. 1, 2, 3. In the vault, we took advantage of it. So especially these two, boom, boom. And this one as well. So that's the way the cookie crumbles. You got to be ready. You got to know what to look at. I recently did a 15-minute video on how to understand this even more in depth. So definitely, get up on the up and up. That's what I have for you guys today. Let me jump over to the other screen. We'll check some of the comments and we'll go from there. So I hit you guys with a lot of info, but look, if you guys don't create or don't have access to tools that can give you confidence, it's hard being an investor, right? If you don't have confidence, you're able to stick with it longer if you have confidence. Like when you're not confident, like, I don't know how long I can do this. You get frazzled easy, right? And that's why a lot of people that bought 74K Bitcoin or, $4,000 Ethereum, they're going to capitulate right away because they just don't understand. They don't have methodology. They don't have practice. And so by watching these streams, you're getting the first part of the practice, but you need to implement the tools for the second part. That's very much important to anybody trying to really get great at whatever they're doing. Let's see some of these comments. What we got? Let's see here. Large and in charge. Let's go. Let's get it. Man, okay, we have some great convos. Let's see. Got a lot of conversation here. Okay. Cameron Robinson. A lot of good information or, things that he's saying. Just kind of looking at some of the stuff he's talking about. Okay. This is true, right? So basically we're saying so commercial property is failing unbelievably. Seeing malls all over being torn down, half empty store plazas. I'm seeing it with all the travels I do, small towns, not as bad. Yeah. I mean, I have commercial real estate too, and it is getting increasingly harder. Tenants not wanting to do their part of the contract agreement and paying what they're supposed to. Taxes rising in your jurisdiction that you can't do too much about. A lot of things kind of happening all at once. So, let's see here. We crash usually in the fall or winter time. Back test that, right? Use the tools to, back test your statement, right? So, yeah, definitely. This is what it's all about, man. I'm so encouraged every single time I jump on stream to not only inspire you guys, but to say, hey, if you're here, you're doing the right, like you're unbelievably doing the right thing. Because 99% of people are just like, what? Oh, snap, what? Oh, I can't just spend all my money on consumer goods. What? I can't just go buy that flat screen TV. I can't just play video games all day. I can't just learn to do something else that's going to benefit you. Acquiring knowledge that may help you learn how to be a better steward of your finances is always going to be time well spent. More time you do that, that's what's going to actually get you serious to take the action. That's what it was for me. So this is key. This is key. So with that being said, you guys, I'm going to put it in the chat. Let me go and add that. VoltaCrypto.com. Okay. If you guys want to step your game up, it's simple. As y'all notice, I'm streaming less, but Volta Crypto is constant. Like we're always in there. I'm always putting stuff in there. And we're catching everything. We're on it unbelievably sharp with a great group of guys and girls who essentially understand what the heck is going on and how to move in these crypto streets. So that's something. I got you. So estimated BTC price in the year. I say somewhere in between 85,000 and 100. Somewhere in there. I would say it's fair. I think at the end of the year we'll stagnate at 100 just because optically it's like, whoa, might push maybe a little bit above like 105, but then we'll have a little correction then, and then whatever 2025 is gonna bring, that's what it's gonna bring. But I also think that we may not just be all super bullish. Like we may have some real life consolidation for a minute, and maybe sometime in Q3 or Q4 we push up, but 75K to 85K, that's not too big of a huge jump, but it's still that's a nice number, 85K. So I think we'll be somewhere in between there. Cool. So with that being said, you guys, I appreciate y'all's time. Once again, there is free content. There is free stuff that y'all can use in the Vaults of Crypto on the website. So let me show you guys this. Right, welcome. Y'all can go ahead and get access to some on-chain data here, as well as as well as the post-chain charts in particular, some of the macroeconomics. But this Learn tab is really high key, especially if you're a beginner. But at the end of the day, you got to click on this tab here. So go ahead, click on this Services tab. Super easy. Press join now. So you're going to get access to everything that I displayed for you guys today, but then also a community of guys that are on the up and up, looking at many different, because here's the thing, I can only look at one, like a certain group of things, right? We've got guys looking at GameFi, and particularly guys that are really looking into post-chain ecosystem, like really, really closely, bringing back the information for us to kind of dissect and talk through and all that kind of good stuff. So click this join now. Super easy. Within 24 hours, you'll be entered into the Telegram chat. You will have all the indicators on your trading view, and you'll be good to go. $69, man, to solidify tens of thousands of, potentially if not hundreds of thousands of dollars for you in future value once you learn what to do. The key is learning what to do. So with that being said, let me put that link in here. Just if you want to go straight to it, boom, there's the link. And yeah, hopefully, I will see you guys in the vault. I'll probably maybe have a chance to drop another stream on here on YouTube, maybe in the next 5 to 7 days. But yeah, you guys continue to work hard. Like, try to extract as much fiat from the hands of your employers, or get it from your customers if you got a business. Hold on to it and get it in this market. For altcoins, get it in to the altcoin before we hit $1 trillion in market cap. You do that, you should be okay. So that's like the simple part of what we looked at. So yes, do what you got to do. It's time to grow up. Like, for a lot of people that are just like, and by grow up I mean take serious. Like, I find that a lot of people just don't take their financial life serious enough. And to me, that means they're just still immature in that way, because they don't want to face the mirror of maybe how bad it is, or they're maybe lacking the confidence of saying, hey, I really want to go for it to be in a good position. Get that confidence, man. Like, get the confidence so you can make a move. So that's the key. Get rid of the stuff that they're printing more of, the dollar, the yen, whatever currency that you're dealing with, peso, and get it in something hard, get it in something finite, get it in something that has fundamentals, right? That's something in crypto in particular, right? But you gotta do something, because if you do nothing, sad reality is it ain't gonna get easier. So thank y'all for coming through. I'll catch you guys here in another stream pretty soon, and yeah, peace out.